If you've been looking at commercial real estate in Alberta, chances are Edmonton has been on your radar. It's one of the most active commercial markets in the province, with steady demand across industrial, retail, and mixed-use properties. But activity doesn't always mean opportunity. Edmonton attracts investors for good reason. There's a large population base, a diversified economy, and a strong tenant pool. Lenders are comfortable here, comparables are easy to find, and exit strategies often feel straightforward. The challenge is that everyone knows this, and as more investors focus on the same types of properties, competition increases. What that looks like in practice is multiple offers, pricing pressure, and cap rates being pushed down. Investors end up paying more for the same income, which can make cash flow tighter and leave less room for error. For many buyers, especially those focused on long-term performance rather than short-term appreciation, Edmonton deals can start to feel very tight. That doesn't mean Edmonton is a bad place to invest. It simply means it's an efficient market. And in efficient markets, it's harder to find mispriced opportunities or value-add deals. This is where it can make sense to expand your search. When you look at rural and secondary markets across Alberta, the pace is different. There are fewer buyers competing for the same properties, listings tend to stay active longer, and sellers are often more open to negotiation. That alone can create better entry points for investors. In many rural markets, acquisition prices are lower and more closely tied to actual income rather than investor demand. That can immediately improve cash flow and give you more flexibility in your strategy. Operating costs are often lower as well, from municipal taxes to building complexity. One of the biggest misconceptions I hear about rural commercial real estate is concern about tenant demand. In reality, many rural properties are occupied by service-based businesses that are essential to the local community. Trades, medical offices, agricultural services, light industrial users, and local retailers often rely on being close to where their customers are. These tenants tend to stay longer because relocating isn't always easy or practical. When they're properly vetted and leases are structured well, they can provide stable, predictable income, sometimes with less turnover than what you see in larger urban centers. That said, rural investing does require a more thoughtful approach. Exit strategies can take longer, tenant quality matters even more, and you need a clear understanding of zoning, utilities, and local demand. Assumptions that work in Edmonton don't always apply in smaller markets. This is where having local, on-the-ground insight really matters. Knowing which areas have stable demand, which properties are manageable from an operational standpoint, and which risks are worth taking makes a big difference. Edmonton will always play an important role in Alberta's commercial real estate market, but it's not the only place where good opportunities exist. For many investors, the strongest deals aren't where everyone else is bidding. They're where fundamentals still drive pricing. If you're considering commercial real estate anywhere in Alberta and want help evaluating opportunities beyond the major cities, I'm always happy to be a resource. Like, comment, and subscribe for more real estate tips and information.